Hey, this is Matt from InvestiQuant. Today is Thursday, September 17th, 2020. And this morning, we saw the markets gap down big. Off the open, we saw buyers step in pretty aggressively. And then in the afternoon, all of the gains that were accomplished in the morning session were given back, and we're trading in the lower portion of the range. So if we look at this chart up here on the top left, this is for the S&P. You can see we opened down here near the lows. We pushed up higher strongly, but we never made it back to the prior day range. We stopped a little bit short of the prior day low before rolling over, and we're currently kind of going sideways down here in the bottom portion of the range. So what I want to do this afternoon is take a look at this type of pattern and see what that has meant historically into the close. So we're going to go into Discover and we'll look at all four instruments. The setup is going to be based upon getting long at 3 p.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. For opening filters, I'm simply going to put gap down. Now, I looked at a handful of things prior to recording this video, and I got fairly similar results as I was messing around with different opening criteria because the gap down was pretty sizable. But by keeping it more generic, I'm going to get a lot more samples this way, and they're coming in line with what I saw with some of the other ones. So I'm going to try to keep as many samples as possible and just keep it as opening below the prior day close. And then I'm going to go into post-open filters, and I'm going to say that the 3 p.m. price is in the bottom half of the intraday range. We don't know if that's true right now. It's not 3 p.m., but we're using a 3 p.m. entry, so that means the close and bottom half of the intraday range needs to be, the price at 3 p.m. needs to be in the bottom half of the intraday range. And then I'm also going to say the 3 p.m. price is below the prior day low. So that's available here, intraday close versus daily levels. I'm going to hit equals next to below prior day low. And then I'm going to put it in a similar market environment where we are below a 10-day moving average, but above a 200-day moving average, and hit view results. All right, so here we go. These are the results of going long at 3 p.m. Eastern Time and exiting at the close 4:15 p.m. Eastern Time when you gap down, and then at 3 p.m. you are trading in the bottom half of the intraday range and below the prior day's low of the day. This is taking place below a 10-day moving average and above a 200-day moving average. Historically, the S&P has 153 samples here, NASDAQ 148, Dow 158, and Russell 134. And if we look at the win rates on these, S&P pretty neutral there, 50-50. The NASDAQ coming in 48%, the Dow 56%, and the Russell the weakest at 43%. But these are all hovering around that 50% mark, with the YM being the Dow futures and the Russell futures being a little bit more outside of that. But generally speaking here, the win rates are not skewed in one direction or the other. But the average win versus average loss does have some skewing going on. And you can see the average loss is larger than the average win. You can see that here in the S&P. That's the same here in the NASDAQ, in the Dow, and in the Russell. So all four of these, the larger average moves have been on the downside than on the upside, but the win rates have been pretty mixed here historically. And let's take a quick look at the results distribution of the S&P. If we take a look at this results distribution, you can kind of see that here. You can see the winning trades which are taking place the right of the zero marker here. You see a good amount here right next to it. So these are small winning trades, and then it starts trailing off. On the left side of the zero, you see the red bars, and those are the losing trades. And you see a bunch of those here just a little bit further to the left of the zero bar. And then as they start to trail off, you start to see some bigger moves out here on the far extreme that you don't see on the winning side. So there's been some more outliers on the downside as well. So historically, the downside has had larger average moves than the upside. Hopefully you found that helpful. Good luck the rest of the day, and we'll see you next time.